So in this video, we are going to be talking about deductions from AGI. Now, as I explained in a video beforehand, these deductions are also known as itemized deductions. Therefore, just know that when I say deductions from AGI, they are synonymous with itemized deductions. But the reason why I'm saying deductions from AGI instead of itemized deduction is because I want to make a clear distinction between deductions from AGI and deductions for AGI. So remember, these are not deductions for AGI. Thus, the following examples in this video are deductions you can take only if you choose to itemize your deductions. Anyone taking the standard deduction will not be eligible for any of these deductions no matter what. So with that in mind, let's get started with the deductions from AGI and the common examples. So the first one that we have on this list is medical expenses in excess of 7.5% of your AGI. So whatever your AGI is, which is your gross income minus deductions for AGI, and I talk about deductions for AGI in part 6 of the series, but whatever your AGI is, multiply that by 7.5%. And if your medical expenses still exceed this figure, then whatever the amount the medical expenses exceed this figure is the amount of deduction you can take for medical expenses. And we'll go over in more detail how to calculate the amount of medical expenses allowed as an itemized deduction in a future video, but in this video we're just focusing mainly on the examples. Okay, so next up we have state and local income or sales tax. This is the first component of what's known as the SALT deduction from 2018 to 2025. And again, we'll go over more of the SALT deduction in a future video, but just know that you can elect to deduct either state and local income tax or sales tax in lieu of state and local income tax as a deduction up to a certain limit. But we aren't too concerned with what the limits are for now. Next up, we have real estate taxes and personal property taxes. And this is the second component of the SALT deduction. Now, in coordination with the state and local income tax or the sales tax deduction that is allowed, the real estate tax deduction and personal property tax deduction allowed makes up the entirety of the SALT deduction. So just briefly, from 2018 to 2025, you can deduct up to $10,000, but no more than $10,000 in either two options: your state and local income tax and your real estate and personal property taxes, or the second option, which is your sales tax and then your real estate and personal property taxes. So you can choose between which two you want, but regardless of which option you choose, the combined total deduction of both of them cannot be over $10,000. So next up, we also have interest on home mortgage. That's also allowed as an itemized deduction. And investment interest, and we'll go over the limitations of that in a future video. We also have charitable contributions. This is also allowed as a deduction from AGI as an itemized deduction. Now, it is important to know that only contributions to a qualified charitable organization is allowed as a deduction, and the deduction allowed, or the limitation allowed on the deduction, actually varies based on circumstances, but in all cases it is limited to 60% of your AGI. Lastly on this list, we have casualty and theft losses in excess of 10% of your AGI. So if your casualty and theft losses expenses do not exceed 10% of your AGI, unfortunately you cannot deduct them anyways. And just like medical expenses, they have a certain threshold that must be exceeded in order for you to take a deduction at all. So now to find your itemized deductions or your deductions from AGI, you would use Schedule A, which is the form that is specifically designed for itemized deductions. If you take a look at Schedule A, actually, you will see that many of the deductions listed out there are deductions I described in this video. So I covered the most common itemized deductions, and I hope you learned a thing or two in this video. Thanks for watching.